If you're a senior homeowner and you've ever thought about deferring your property taxes to save money, I need you to stop and listen to this before you sign anything. Because starting this year, that so-called senior-friendly deferral program just quietly got a lot more expensive. The interest is no longer simple. It's compounding now at prime plus 2%. That means the longer you defer, the faster your debt snowballs against your own home. And here's the part that keeps me up at night. Most seniors who sign up for deferral don't even realize the rules changed underneath them. They think they're locking in the same deal their neighbor got 5 years ago. They're not. But here's the good news. There is a real 0% strategy, one that doesn't touch your equity, doesn't compound against you, and doesn't ever need to be repaid. It's not a loan. It's not a deferral. It's money the government simply doesn't collect from you in the first place. Stick with me because by the end of this video, I'll show you exactly how one senior couple in the Fraser Valley knocked their entire property tax bill down to almost nothing, legally, permanently every single year, using 4 stacked programs most people never combine. I'll also show you a 5th, lesser-known move involving your property assessment that can protect all of these grants at once. And I'll answer the questions I get asked most in the comments, so stay right until the end. Let's get into it. Before we start, let's talk about why this matters right now more than it did 5 years ago. Home values across British Columbia and across most of the country have climbed sharply over the last decade. That's good news for your net worth on paper. But it's terrible news for your property tax bill because municipalities calculate what you owe based on assessed value. Your home going up in value doesn't put a single extra dollar in your bank account unless you sell it, but it absolutely increases what the city charges you every year. That's the trap so many seniors fall into. Their income stays flat. Their pension stays flat, but their tax bill keeps climbing because their house, on paper, looks more valuable. That gap between what your home is worth and what you actually have in your pocket is exactly where deferral programs try to sell themselves as the solution. And for some people, it genuinely can be a tool, but it should be your last resort, not your first move. Your first move should always be the money you never have to pay back. Point number 1, the homeowner grant. What is it? The homeowner grant is a direct reduction on your property tax bill. This is not a loan. You are not borrowing this money and you never pay it back. The province simply lowers the amount you owe before you even write the check. Think of it like a coupon that gets applied automatically to your tax notice, except it's not automatic at all. You have to claim it. And that's exactly where thousands of eligible seniors lose out every single year. What is it worth? For 2026, if you're a senior age 65 or older, the additional grant is worth up to $845 in Metro Vancouver, the Fraser Valley, and the Capital Regional District, and up to $1,045 if you're outside those areas in northern or rural BC. That's real money coming off your bill every single year, automatically forever, as long as you keep applying. Compare that to a regular homeowner who isn't a senior or a veteran or living with a disability. They only qualify for the basic grant, worth up to $570 in Metro Vancouver or up to $770 outside it. The senior version of this grant is worth meaningfully more, and it replaces the basic grant rather than stacking on top of it, so you get the higher number, not both added together. How do they get it? You apply through your property tax notice or online through the province's e-tax system when your tax notice arrives, usually in May or June. To qualify, your home has to be your principal residence, the place you actually live, not a rental property or a vacation cottage. You need to be a Canadian citizen or permanent resident and ordinarily resident in BC. Your home's assessed value also needs to fall under the 2026 threshold of $2,075,000. If you're over that threshold, don't panic. The grant doesn't just disappear, it phases out gradually, $5 for every $1,000 over the line, so most homes still get a partial grant even above the cutoff. There's also a minimum tax requirement. Seniors and other additional grant recipients need to pay at least $100 in property tax before the grant kicks in, which almost everyone clears without even thinking about it. Now I know what some of you are thinking. If this is real, why doesn't my municipality just apply it automatically? Good question. The answer is frustrating but simple. The government will never chase you down to give you money. You have to apply every single year, even if you applied last year and nothing about your situation changed. Nearly 500,000 seniors across BC claimed this grant last year alone, but provincial tax offices have confirmed thousands more qualify and simply never file the paperwork, often because they assume it's already built into their bill or because they moved and didn't realize they needed to reapply at the new address. This isn't a loophole. It's a program sitting right there waiting for a signature. Point number 2, the low-income grant supplement for seniors. What is it? This is the piece almost nobody talks about, and it's designed specifically for seniors whose home value climbed so high over the years that they got pushed above the homeowner grant threshold, even though their actual income stayed low. This is the classic house-rich, cash-poor senior. Maybe you bought your home in the 1980s for a fraction of what it's worth today, and now the assessed value alone disqualifies you from the full grant, even though your monthly income barely covers groceries and medication. What is it worth? If your property is assessed above $2,075,000, but your adjusted net income is $32,000 or less, you may qualify for a supplement that tops up your grant back toward the full amount. For a senior sitting on a paid-off home that's ballooned in value because of the housing market, not because their income went up, this can mean the difference between losing hundreds of dollars in grant money and keeping it all. This is the program that specifically corrects for the unfairness of being taxed on paper wealth you can't actually spend. How do they get it? You apply directly to the province's Homeowner Grant Administration alongside your regular application, and you'll need to show your net income from your most recent tax return. This is exactly why filing your taxes every year matters, even if you think you don't owe anything. These programs check your income line, and if you don't file, you can't prove you qualify. If you haven't filed a return in a year or two because your income felt too low to bother, that habit could be quietly cutting you off from money you're entitled to. File every year, even a zero income return, just to keep this door open. Here's the question I get constantly in the comments. Will applying for these grants affect my GIS or my OAS? No. These are property tax reductions, not income. They don't get reported as income on your tax return, and they have zero effect on your guaranteed income supplement or your old age security. Your accountant may never have mentioned this simply because most accountants file your income tax return. They don't manage your municipal property tax notice. Those are two completely separate systems run by two completely separate levels of government, and that gap is exactly where seniors lose money every year. Your accountant isn't hiding anything from you. It's just not their job to track your city hall paperwork. Point number 3, municipal low-income property tax relief. What is it? On top of the Provincial Homeowner Grant, many individual municipalities across Canada run their own local tax relief or exemption programs for low-income seniors. These are separate pots of money, run by your city hall, not the province. They exist precisely because city councils know that provincial grants don't always cover the full gap for seniors on a tight fixed income, especially in cities where property values have climbed the fastest. What is it worth? The dollar amount varies significantly by city because every municipality sets its own budget and its own rules. Some cities offer a flat annual credit, others offer a percentage reduction on your total bill, and some offer a tax certificate that caps how much your bill can increase year over year regardless of what your assessment does. This is exactly why it's worth 10 minutes of your time to check, because the difference between knowing this program exists and not knowing can be hundreds of dollars a year, repeated for as long as you own your home. How do they get it? Call your municipal property tax department directly or visit your city's website and search Low-Income Senior Property Tax Relief. Ask specifically whether they have a senior exemption, a tax relief grant, a tax deferral cap, or a low-income rebate program separate from the Provincial Homeowner Grant. Ask the person on the phone to walk you through the application in plain language. Municipal staff deal with these questions constantly, and most are happy to help you fill it out over the phone. If you live outside BC, search your own province's equivalent where, for example, similar homeowner grant and property tax credit programs exist under different names in Manitoba, Ontario, and Quebec. So don't assume this is a BC-only opportunity. The name changes, but the concept of permanent reduction instead of a loan shows up across the country. Bookmark your municipality's page once you find it because these programs sometimes update their thresholds and deadlines every year. Now here's the part where I have to be completely honest with you because a trusted advisor tells you the truth, even when it's not what you want to hear. The property tax deferment program still exists, and for some seniors in a genuine cash crunch, it can still make sense as a last resort. But as of the 2026 tax year, the rules changed. It used to charge simple interest at 2% below prime, cheap, and it never compounded. Now, any taxes you defer from 2026 onward charge compound interest at prime plus 2%, which works out to somewhere around 6.5% to just under 7% compounding monthly. That means the interest starts charging interest on top of itself. If your taxes from 2025 or earlier are already deferred, those stay under the old, cheaper rules. But anything new you defer going forward is playing by a much more expensive game. The province itself has said the average deferred amount runs around $5,400 per senior. Run that number through a compounding calculator over 10 or 15 years, and you'll see exactly why this program was never meant to be your first stop. This is the entire point of this video. Deferring your taxes means you are borrowing against the equity in your own home, and now that loan grows faster than it used to. Claiming your homeowner grant, your low-income grant supplement, and your municipal relief program means you are simply not paying that money in the first place. Nothing to repay, nothing compounding against your estate, nothing your children inherit as a debt attached to the house when you pass. Deferral has its place. Genuine emergencies, a sudden medical bill, a year where every other option has already been exhausted, but it should never be the default plan when 3 non-repayable programs are sitting there unused. Point number 4, stack them together every single year. What is it? This is the strategy itself, not one program, but layering all 3. The basic grant, the low-income supplement if you qualify, and your municipal relief program applied together every single year without missing one. Most seniors claim one of these and stop there, assuming that's the full extent of what's available. The real strategy is treating your property tax notice the same way you'd treat your income tax return, as a document you optimize every year, not just pay. What is it worth? Picture a senior couple outside Metro Vancouver with a modest fixed income. Between the additional homeowner grant worth up to $1,045 plus a municipal low-income relief credit on top, their total property tax bill dropped by well over half-toss permanently with nothing owed back, ever. Over a 10-year retirement, that's not a one-time win. That's thousands of dollars that stayed in their pocket instead of compounding against their home. How do they get it? Mark one date on your calendar, the day your property tax notice arrives, usually in May or June. That same week, apply for your homeowner grant online. Check whether the low-income supplement applies to you based on last year's tax return, and call your municipality to ask about local relief. Do all 3 in the same sitting so you never let one slip through the cracks while you're focused on another. Keep a simple folder, paper or digital, whatever works for you, with copies of every application you submit and the date you sent it, so next year you're not starting from scratch, you're just updating what's already there. Last skeptical thought, and it's a fair one, is this actually legal or is this some kind of gray area trick? This is not a loophole. This is not aggressive tax planning. These are published government-run programs sitting on the BC government's own website and your municipality's own website, designed specifically for homeowners like you. The only trick here is that almost nobody applies for all of them at once. Point number 5, protect your grants by checking your assessment. What is it? Every January, BC Assessment mails out a notice of assessment showing what they believe your home is worth as of July 1st of the previous year. This number isn't just academic, it's the exact number that decides whether you sit comfortably under the homeowner grant threshold or get pushed above it. If your assessment jumps sharply in a single year, sometimes due to a clerical error, a miscounted square footage, or comparing your home to sales that don't actually reflect its condition, you could lose part or all of your grant without doing anything wrong at all. What is it worth? Catching an inflated assessment before the deadline can be the difference between keeping your full grant and losing hundreds of dollars because your home was overvalued on paper. It cost you nothing to check, and it protects every other strategy in this video because all of them are anchored to that one assessed value. How do they get it? When your notice of assessment arrives in January, compare it against similar homes in your neighborhood using the BC Assessment website, which is public and free to search. If your number looks out of line, you can file a notice of complaint with the Property Assessment Review Panel by the January 31st deadline. This is a free, straightforward process, and you don't need a lawyer to do it. You're simply asking a panel to take a second look at the number. If you disagree with the panel's decision, there's a further appeal option through the Property Assessment Appeal Board. Most seniors never touch this system because they assume the number is fixed and final. It isn't. I get asked a version of this question every time I cover property tax. What if my spouse and I own the home jointly? Does that change anything? No. Joint ownership doesn't block you from any of these programs. As long as one owner meets the age and residency requirements, the property can still qualify for the senior grant. And if you're wondering whether any of this applies if you live in a condo or strata property instead of a detached house, the answer is yes. The homeowner grant, the low-income supplement, and most municipal relief programs apply to any principal residence you own, strata included, as long as it's the home you actually live in day to day. Another common one. I'm a renter. Does any of this help me? Property tax grants themselves are for owners, since renters don't receive a property tax notice directly. But if you're renting, look into Shelter Aid for Elderly Renters, a separate provincial program built specifically for senior renters on a fixed income. It works on a completely different application, so it's worth its own conversation, but I didn't want you sitting there thinking this video has nothing for you if you rent. So here's your one action step for this week. Pull out your most recent property tax notice or wait for the new one to arrive and confirm 3 things. Are you currently claiming the full homeowner grant you qualify for? Have you ever checked whether your municipality runs its own low-income senior relief program on top of it? And does your BC assessment notice actually reflect what your home is realistically worth? That's it. That's the whole strategy. No deferral, no compounding debt against your home. Just money you were always entitled to and never collected. If this video just saved you money, do me a favor and share it with a neighbor, a sibling, or a friend at your senior center who's still deferring their taxes the old way. Drop a comment below and tell me which province you're in. I read every single one, and it helps me know what to cover next, whether that's your province's version of these grants or a deeper dive into assessment appeals. And if you want more of these straight talk breakdowns on what the government actually owes you, hit subscribe, because I put out a new one every week. I'll see you in the next video.